Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today we are going to look at the Dow Jones Industrial Average, what happened yesterday, and what we can expect for when I wake up tomorrow, see what's going on. So, as you can see from today or yesterday, well, I guess still today, which is Tuesday, July 6th, it's pretty much a down day for the full day. And so starting off, we just had a couple five-way moves down right here. Just zoom this out real quick. So here you have the 0, 1, 2, 3, 4, 5 down there. Comes up, fulfills it, hits the 38% Fibonacci retracement level. What these little triangles are is they just signal to me that one setup that I do look for isn't complete yet. And let's see, the 1, 3, 4 is the shift. So I'll just show you what that looks like right here, pitchfork. So all that tells me right there is I'm still waiting for it to eventually come up, break above the green line, and go up there and hit the blue line. But it's got a ways to go for that one, so that's why we're not having that on there right now. But as you can see, price just started making the five-way down, then came up, set for another five-way, 0, 1, 2, 3, 4, and then 5 down here. And then there's two setups that haven't completed. One, that shift one, and then the other one, the inside pitchfork right here. You see price came back up, hit the median line for it, but we're looking for it to close above the green and then go up to the blue. This one may not come up and get hit just because it needs to really take off some, go get up there, but maybe it can. We'll see, but we'll go ahead and take that off of there for now. So yeah, that's basically what we had. Five-way move, and then just another five-way move after that, and then it just kind of rotated around right here. Just started grinding on down, and it was looking like using this one right here that we were on our way to creating another five-way move down right here. We have one, and then we taking the number 2 one right there. It was looking pretty good right around here. And then it's getting closer to the market open. Price came up, broke the number 1 line right here. So then we couldn't use that anymore. And then just all craziness broke out right when the market opened at 8:30. Price just shot on down and went pretty much straight down until around 10:25 Central Time, and then started retracing back up some. So what that did, set the price action up tomorrow is these black lines. All they represent is that is the 0 to 1 line right here. So if price comes up and breaks this black line right here, then we can't have a five-way move from this high right there. But if it doesn't and it stays below that black line, then we'd be looking at coming down to at least coming down to 34,189 to complete that five-way move right there. But then we also have one going up, we had one going up the other way the last I looked at it, but now it's not valid anymore because as you can see, using this being the 0 to 1 move right there, and this going up here, the 0, 1, 2 to 3. Well, it can't come back and break into, as far as one of the rules for the five-way move, price can't come up and break, or come down and break the one wave, and you can see right there, that's why I have the black line for it. That's the top of the 1, 0, 1. Price came down there and broke it, so that is no good anymore. So there could be another two-way move down. Price would have to go break this high right here. Price have to go break the high and then come back down and hit the 30% retracement, but I'm not really worried about that right now. So really, the most likely scenario, if it does end up happening, is a five-way move going back down over here. One other thing I wanted to show with this right here is these big moves happen. A signal for them is when the 50 EMA crossover crosses over the 200. I wrote a blog post about this. I think the EMA I was using for the longer one is the 250. Since then, I've gone down to the 200 for it. So as you can see right here, the way I look to trade these is when the red line, which is the 50, crosses over the blue line right there, I just take the previous swing high at the top and then just start tracking all the way down to the bottom until two things happen. One, price has to break. Let me get the Fibonacci retracement off of there. So price, the red line has to cross the blue, and then I look for the retracement come back up. So using that previous swing high from the last time before it broke down, we're going to use that. So then right about here is when it broke down. So where's the low? That's the low right there. So then all we're doing is we were starting to look for where's the retracement going to happen right there. There's the low, still not a retracement right there. Hold on, computer's freezing up. There's another low right there, and there we go. That is probably going to be, is that 34,686? Yep, so that is it right there. So that right here, it came back, hit a 38% line, which locks in that the retracement is there, and then came back down and hit the target right there, the 1.146 trade right there. Obviously, it wasn't done yet at all. Going back down, it went all the way down to the 4.236 extension level. So I mean, that's a huge drop for the day for that move right there. It hit the target I do look for, which is the 1.146 level for it right there, and then just went off to the races as soon as the market opened right there. But that's just one thing to look for. Quick and easy way: put the 50 EMA and the 200 EMA using the what is it? The close? Yeah, the source, the close. And when you get that crossover, just look for that retracement to come back up and get it. It doesn't work 100% of the time. Every time, there's some other things to look for with it. If it doesn't work, and if we get one of those, I'll point it out. But right now, this is the way it works. A lot of the time, you just look for that retracement, and then look for price coming back down and hitting that 1.146 target right there, which it did obviously very easily for that one. So then going into today, there's still some room to make up for it. So we'll see what happens when price comes up and starts hitting on that 200 EMA. If it's going to continue up through it and bring the 50 EMA up for it, then if it does that, we would just take it from down here, the swing low, drag it up until the 50 crosses the 200, and then after it does that, we'd be looking for the retracement to come back down to at least the 38% line, which would signal when we'd be looking for the price to move back up to the 1.146 level from right there. So that's one thing to keep in mind for tomorrow. And then the other one is just looking for the continuation of this 5-wave move down. Obviously not sure if that is going to happen or not. And then let me just show you for an example right here of a couple more of them. Like here's one. Here's the 50 crossing over the 200 right there. So we just take that swing high, put the Fibonacci at the top of it, and then we start dragging it down to the bottom, because there it had definitely come over. There it hit the 38 again, and then right down to the 1.146. This one went down to the 1.618. Now that is a target I would like to take, but I have seen it. The 1.146 is really the one where if it's going to go down and hit, it's at 100% of the time. This one is obviously going to be the next one where it does hit a lot of the time as well. But definitely the 1.146 is the main target for it. And then coming back up for it, this is kind of interesting. So using this, see price didn't break it. The 50 EMA doesn't break it to right over there. So all we do is use that previous swing low before the price broke up above the 50 to 200 EMA, and then we just keep moving it on up until price comes down and hits at least the 38% line, which locks in the target for it, or that the Fibonacci extension trade is valid for it. There's the previous high for it. So as you can see today, price did come down and hit that 38 to 50%, and even down to the 61.8. Put that on there as well. There it is. See the 61.8 right down there. That's where it found its support for it. And then I like having the 78.6 on there as well. But anyways, it ran down here, hit the 78.6. So if price is going to go and use this as just kind of like an A, B, C trade going back up, then the target we will be looking for in the next day or two would be 34, at least 34, what is that, 34,865 right up here. So it is a valid setup for the Dow Jones futures market. Very bullish setup for it right there. That was the crossover we had a couple days ago, and then finally today it finally came down and at least hit the 30% line. That starts the potential for this moving back up to the 34,865 region. So something to look out for. There definitely can be some upside to this market after the sell-off we had today here in the Dow futures markets. So that's that for July 6th. Moving on to tomorrow for July 7th for the Dow Jones Industrial Average futures. Take care out there. Thanks. Bye.